Salam sejahtera, Anda bersama saya Rizal Zulkapli dan ini Niaga AWANI. Kita mulakan dengan perkembangan dalam negara ataupun perkembangan pasaran saham di Asia. Saham di pasaran Asia didagang bercampur dengan pelabur memerhatikan situasi di Turki. Ini selepas lira catatkan kejatuhan berbanding dolar Amerika selepas Presiden Turki yang inginkan kadar faedah rendah pecat Gubernur Bank Pusat. Sementara itu saham di Bursa Malaysia dijangka diniaga berhati-hati minggu ini dengan pelabur terus memantau prestasi hasil bond Amerika Syarikat serta keputusan mesyuarat People's Bank of China. Menurut ahli ekonomi Bank Islam Malaysia, Adam Muhammad Rahim, pelabur akan terus mengawasi pergerakan hasil bond 10 tahun Amerika selepas ia naik kepada 1.75% pada hari Khamis lepas, tertinggi sejak Januari 2020.
Hasil bond Amerika itu juga terus mengurangkan kehendak pelabur terhadap ekuiti serantau. Tambah Adam, pelabur akan memberi perhatian secara teliti sama ada Bank Pusat China itu akan melaksanakan dasar monetari yang lebih ketat seiring dengan peningkatan ekonomi. Mesyuarat Bank of Thailand dan Bank Pusat Filipina juga akan berlangsung minggu ini. Di samping itu, Adam berkata, Malaysia kini berhadapan ketegangan geopolitik selepas Korea Utara memutuskan hubungan diplomatik dengan negara ini. Ia adalah tindak balas terhadap tindakan Malaysia mengekstradisi seorang rakyat Korea Utara ke Amerika Syarikat untuk menghadapi tuduhan pengubahan wang haram. Sentimen lain yang dijangka pengaruhi pasaran termasuk keputusan pertemuan wakil Amerika Syarikat dan China di Alaska yang berakhir pada Jumaat. Biarpun tidak mencapai sebarang keputusan, kedua pihak komited untuk memastikan saluran komunikasi terus terbuka.
Dan dalam masa yang sama, ringgit dijangka diniagakan secara berhati-hati berbanding dolar Amerika Syarikat pada minggu ini. Menurut ahli ekonomi Bank Islam Malaysia Berhad Adam Muhammad Rahim, ini seiring dengan prestasi mata wang pasaran sedang pesat membangun lain serta trajektori hasil bond Amerika Syarikat.
Adam berkata ringgit susut pada kurang daripada 0.5% minggu lepas dan mencecah 4.11 berbanding dolar Amerika pada Jumaat berikutan prestasi pulangan pembandaraan Amerika yang terus meningkat. Tambahnya, pelabur akan terus mengikuti rapat pergerakan hasil bond selepas bond 10 tahun Amerika menokok sehingga 11 mata asas kepada 1.75% pada Khamis, tertinggi sejak Januari 2020. Pada asas perbandingan Jumaat hingga Jumaat, ringgit mengukuh berbanding dolar Amerika.
Dan kontrak niaga hadapan minyak sawit mentah MSM di Bursa Malaysia Derivatives dijangka menyaksikan dagangan lebih tinggi pada minggu ini. Ia dijangka dipacu unjuran peningkatan pulangan ekspor yang mengekalkan sentimen positif di pasaran. Menurut Palm Oil Analytics, harga MSM juga dijangka meningkat semula dengan data ekspor bagi tempoh 1 ke 20 Mac diunjurkan menokok sebanyak 5 ke 7%. Minggu lepas, dagangan pasaran kebanyakannya rendah dan menjejaki kelemahan prestasi harga minyak soya dan prospek mengenai peningkatan pengeluaran pada minggu-minggu akan datang. Dan untuk membincangkan berkenaan unjuran pasaran pada minggu ini, kita bersama Stephen Ines, Ketua Strategi Pasaran Global XC. Stephen, let's talk about the bond yield which went up to around 1.75% last week. Will investors focus on this week?
Yeah, it's just an overriding narrative right now, and investors and also traders are continuing to price in higher bond yields, which is basically an economic reality, given the fact that most people are expecting the U.S. economy to do quite well over the next 6 months. You know, the issue is, where does the bond yield stop? That's the problem. Right now, the markets are sort of keenly focused on some, obscure numbers between 2 and 2.25% in the 10-year. It's not necessarily picking numbers out of a hat. This is just roughly an approximation where they think that the break-even for inflation versus the economic reopening narrative is going to set in.
And what will perhaps guide investors when it comes to stronger yield?
Well, there's two factors. Actually, there's three factors. Of course, there's the inflation worrying factor, which is going to force investors to reprice in higher interest rates from the Federal Reserve Board. That's the worrying aspect. The positive aspect here is that higher yields are just simply a reflection of a strong economy. And that's a good thing. And this is why we're looking at stocks in general are doing good. Of course, the mega cap tech stocks, which are considered long duration assets, are very, very volatile to rising and also falling yields for that matter, because they really like it when rates go down. We're starting to see that play out. I don't think things are really going to change in the narrative. I think what we have to get used to here is that yields are going to continue to go up. That doesn't necessarily mean it's bad for stocks, but the issue I have, and this is the third issue here, it's the volatility around yields, and that's the problem. That volatility in U.S. Treasury markets is now higher than the volatility in VIX. So certainly, yield volatility is actually driving the risk narrative right now, and that's worrisome because historically, when rates become super volatile, it affects a plethora of asset classes, and that's what we're seeing playing out. No asset class right now is defensible, and this is why investors are a little bit worried because they can't find a good place to hide right now, so to speak.
And stocks are traded mixed in Asia, as CNBC reported that investors are watching the situation in Turkey with regard to the central bank. What happened there?
Another pink slip to another central banker who raised interest rates, and the president in Turkey doesn't like high interest rates, apparently. This is the third central banker in less than 2 years that has been fired unceremoniously. The problem we have there is that investors lose confidence not only in the central banks, but it brings in an element of macro risk uncertainty, and that's the problem because we can't figure out how the central bank's going to react, one, to a heightened inflation, or two, how they're going to react if inflation doesn't happen. The worrisome aspect is just the constant struggle that they have in emerging markets. Is like, look, weaker currency is actually more favorable in the sense that it can contribute to exports, but it's also damaging in the fact that it hurts the domestic economy because it makes things that much more expensive. So it's a bit of a trade-off here that you're constantly worried about in the emerging market risk. The problem we have today is that the Turkish lira is a very, very oversubscribed carry trade. What I'm referring to is that investors were buying Turkish because of its high yield, figuring that was a really good, safe investment. And they're actually quite happy last week when the central bank raised interest rates 200 basis points, 100 basis points more than expected, but now are shell-shocked. A lot of these carry trades in Asia emanate from Tokyo because Tokyo investors are big buyers of these carry trades. So waking up to a 17% drop in a carry trade, wiping out virtually all the benefits of the last 4 months is quite shocking and quite a reality check to open up. So yeah, the markets are taking it, but there's no cross market contamination from this. This is usual. We're used to what happens in the Turkish lira, and this is going to be an idiosyncratic, isolated event. It will not really be a risk contagion event.
Speaking of central banks, the PBOC will also hold a meeting this week. Do you think it will tighten monetary policy looking at the current economic data?
It's very difficult to figure out what they're doing. They put out hints of tightening, then come back loosening. I think the writing is on the wall here that we're going to have a less accommodative PBOC. Whether they announce it or not, it's immaterial. I think we're coming to the end of possibly a credit cycle in China. China's definitely worried about bubbles and inflation problems. I mean, they were dealing with that prior to COVID, and I think now that they've sort of stimulated the economy sufficiently enough to get liftoff, the concern is there could be asset bubbles. So the first line in defense is not necessarily the withdrawal liquidity right away, but perhaps target it to areas of the economy that need it the most rather than just lavish the entire market. Something the exact opposite of what the U.S. policy under Biden is. That he's just throwing money everywhere instead of targeting it towards the people. And the problem with that type of policy, putting that kind of money into the system so quickly could raise inflation. That's a worry. China's not worried about that problem right now. China's more worried about asset bubbles at the moment, not necessarily inflation.
And both the US and China had a meeting in Alaska last week. The outcome was pretty expected. What do you make of this? Will Biden take a tough stand similar to President Trump's when it comes to China?
Yeah, if he wants to stay in power, he'll have to, because if you look at the polls in the U.S., they're very anti-Chinese sentiment. And it's not just a result of the COVID. It's beyond that. It's the thought here is their Chinese expansionists is really expansion policies have really rocked a lot of investors, or locked a lot of voters in the U.S. markets, and they're quite concerned. So one of the things that's been quite favorable in the polls is that you have to be an anti-China, or not necessarily anti-China, but you have to push back against the policies, not necessarily anti-Chinese, but have to be anti-Chinese policy. And I think this is what the electorate in the U.S. likes.
And Stephen, I think three things from the US this week: manufacturing PMI for March, testimony by the Fed Chairman Jerome Powell, and personal spending numbers. What will investors focus on, and how will investors trade ahead of this key investment? Because I think the Fed made it clear that it would not increase rates until maybe 2023.
Yeah, I mean, it should be an exciting week, but the fact is the market doesn't believe what the Feds are selling right now. The market's going on their own volitions. They think inflation's going to hit, whereas the Fed thinks it's going to be transitory. That debate's going to go on for the next 6 to 12 months. So, regardless of what it says this week, that debate's still going to be going on. PMI numbers are very, very important because they're going to give us another look into the boom cycle, and this is very important even for the inflation front. If the PMI numbers come out very solid, we'll see yields rise again because they're anticipating inflation. This could be another negative for the overall mega cap, but not necessarily for the underlying stocks. So if you're going to be investing in stocks, make sure you invest on an index, if you're an index investor, that has a lot of cyclicals, not a lot of mega cap tech stocks in it.
And will personal spending numbers perhaps indicate if consumers are spending again?
Yes, and arguably they are. It just depends on how accurate the numbers are, because a lot of spending is getting done online. Whether those reporting can be as convincingly enough attracting that. A little bit hesitant about all the numbers still getting reported right now. I still think there's a bit of a hangover. Likewise, in China, we're going to have a hangover from the Lunar New Year lockdown situation. So we have to be very careful how we're analyzing the data. I always err by taking data samples over a 3-month period, not trying to get too excited about a 1 or 2 month. Even now, I'm even more concerned about taking it over a 6-month cycle because of the distortions due to the recovery and the ups and downs that we're going to have between lockdowns and non-lockdowns. We could get a hyper jump in some spending, but is that just pent-up demand, or is that true spending power? We have to be very careful how we analyze the data coming out over the next couple of months.
And what are some of the key factors to affect Ringgit and Bursa Malaysia this week?
It's obviously the U.S. yields, and it's not necessarily where the U.S. yields are, it's where the U.S. yields are going, and that's going to be an overriding concern for the ringgit. The other problem is oil prices right now. It looks like there's a lot of froth that's come out of the oil market, and I think that's just a fact of life, that maybe sentiment got too far ahead of the actual demand recovery, because, we got over $70 in oil, and really on what? Just sentiment. Demand hasn't caught up. We're not higher demand levels than we were before COVID, but prices are higher. That disconnect didn't make sense. So what we've seen a lot of investors who were betting on oil reflation trade move off that and looking for other assets right now. So the oil and the froth in oil has come up, and that's not necessarily positive for the ringgit right now. Although, if we look at from a budget perspective versus where oil prices are right now, it's very, very positive. So let's not blow this out of proportion here. Oil above $60 a barrel is very, very favorable for Malaysia, especially for the government coffers, and that's a positive. 70 would have been better, but 60 is still good. So let's not look at it as an entire negative.
Will this issue with North Korea affect investor sentiments?
It's a geopolitical risk that is always on the back burner. I don't foresee it as being a major issue again. We're going to continue to have these flare-ups. It's just part of life, and that's what we've grown accustomed to. I'd be very, very concerned if investors started to put too much focus on it, because I think it'll just, as it always does, if there is a sell-off in the market as a result of North Korea risk, we generally fade those, and the markets come bouncing back pretty quickly. So I don't think there's any risk here at all.
And Stephen, coming back to the U.S. Bond yield, do you think there'll be an outflow from equity markets in Asia, perhaps into U.S. bonds?
It's this debate again here. It depends on what area the stock markets we're looking at. Long duration assets in Asia, like in the mega tech sector, are under pressure not only from U.S. yields but also from regulation. Okay, that's not going to change. That's been ongoing for 5 years, and it's going to be a continuing issue. As technology improves, regulation has to catch up. That's going to be part and parcel. That's going to hold back risk. But now it's getting compounded by there. However, if we look at other cyclical elements, if we look at reopening narrative, if we look at the travel sectors, look at airlines, for instance, these sectors could still pick up. So we have to be very, very careful how we say, oh, stocks are all going to move over to U.S. assets. No, they're not. They're not going to move into U.S. bonds. They're going to continue to drive a cyclical uptick, which is arguably good, but those oversubscribed areas, those places that have overvaluation, those are the ones that are going to lag. And that's how we have to differentiate ourselves in the stock markets right now.
On that note, thank you very much Stephen Ines, Ketua Strategi Pasaran Global Axi membincangkan berkenaan dengan unjuran pasaran pada minggu ini daripada Bangkok menerusi Skype. Kita akan berhenti berehat seketika, kembali selepas ini.